Welcome to Lesson 10, Risk Management. Now, this is the foundation upon which everything is built. If you have ever heard of Warren Buffett, you might have heard him say, rule number one, don't lose money, and rule number two, never forget rule number one. The first thing we have to do as day traders in our day trading career is protect our account. We must protect our financial capital. One, we have to protect it against the market because the markets are random and unpredictable. And two, we must protect our accounts up from ourselves. This is the most important thing. The markets will always be here. A lot of persons get blown up every day, right? But the markets are still gonna be open. So as long as the markets are open, we want to preserve our ability to trade and make money. And we do this by setting up max loss parameters that are programmed on our broker's end. So this way, once they're triggered, there's absolutely nothing we can do. So at the moment, my account size is 30,000 US. Roughly, I keep about 30,000 US in my account. And at the moment, I risk only losing 1% of my account or $300 per day, right? So there is absolutely no way I'm going to wipe my account out or even violate the PDT rule. So for the PDT rule, you have to have above 25,000 in your account. So 5,000 divided by 300, that's roughly 15 max loss days. I mean, even the most horrible trader is it's not gonna be very unlikely to hit max loss 15 days in a row. I mean, when you're now starting, yes, but when you have an idea of what you're doing and you have a system like I'm gonna teach you, then it's very, very, very unlikely. Even when you're like, absolutely horrible. But notwithstanding, I mean, max loss per day, programmed with my broker is 300. So as soon as my unrealized plus realized gains on the day hit minus 300, all of my positions are liquidated and I'm shut out from entering any new positions. So I have to cool my head off, regain focus, recollect myself for the next day. In addition to that, also programmed with my broker is I have a max loss of $200 on a single ticker. So if I take a stab at Apple and in one single trade I'm down 200, I can't place any more trades on Apple. If I take one trade, lose 100, take a second trade, lose another 100, that's it for me. Because these are based on the fact that if I'm wrong twice in a row on a stock, then it's either I'm reading the stock wrong or the stock is a perfect candidate for me to be trading. So this is a fail safe to protect me from the markets and to protect me from myself. In addition to this, I have a max loss per trade of 100. So what I do is I enter trades in two ways, either using a stop limit or limit order, in which case I have to know how many shares I want to import into the system beforehand. So for this, to calculate this, I use a spreadsheet, or alternatively, I can double click on my chart and get in with what is called something that is called a hotkey. I will show you guys this later on. And this is programmed that once I've entered into the position, it automatically puts in a stop for me and I can't lose more than 100 on that individual trade. However, the only way you can lose more than 100, even with your stop, is either your stop doesn't get executed, which can sometimes happen. It's rare, but sometimes it can happen. But most of the time we're there watching our screen. So in event something like this happens, we can get out immediately, or we can make a complaint to our broker that our stop was executed, and maybe they can make some adjustments to your account. However, the spread of the stock, like I showed you before, is extremely important. So if we get into a stock, let's say 100 shares at 101 with a stop at 100, right? If the stock drops from 101 to 100, in theory, we only lose $100. However, if the stock has a wide spread, so let's say the stock is trading with a 25-cent spread, so that when our order gets triggers at 100, it gets executed at, say, $99.75 instead of 100 like we would like it to, then we're going to lose 125 instead of 100. So the max loss per trade and the spread are, both of them are linked. So that's why one of my criteria is that the stock must have a tight spread. Even though it meets all the other criteria, if it doesn't have a tight spread, I'm not going to trade it because this would put me at risk of losing more than $100 on the trade. Okay, and the last major risk management criteria, which is also programmed with my broker, and these are only possible, as far as I know, these are only possible with Dash Trader Pro. So that's why I make it a point to only recommend brokers that give you access to Dash Trader Pro. So again, again, I asked my broker not to allow me to enter any trades before 9:45 a.m. Two things used to trip me up all the time. One, getting involved in trades in pre-market, which is absolutely unnecessary and risky because you can't use stops and the market is unpredictable in the pre-market. The second time I used to get myself in trouble trading during what I call a market open. So from 9:30 to 9:45 or the first 15 minutes of the day, prices can go crazy. Even though we're looking at the right stock, sometimes a stock can spike up, spike down sharply, at the same time, and you can get nasty slippage and lose, hit your max loss, before you know it. So I avoid trading during this time. I let the price action settle down and wait for clear discernible patterns, wait for the spreads to tighten up, you know what I mean, and wait for when everything is obvious and it is much easier to make money, right? So if you want to stay in the game, risk management must be our king. Trade management is a queen, but which I will touch on in our coming lesson. But risk management is the king, especially when you're green, when you're a newbie, you're a beginner. We must put guardrails to protect our account from ourselves. And I'm telling you this from experience. I've blown up several accounts, and if I'd simply had these risk management parameters in place, maybe I would have blown an account or two, but I would have gotten to consistent profitability a lot faster. So there you have it, guys. Lesson 10, risk management. Looking forward to seeing you again in lesson 11.